All right, welcome in everybody. Today I'm doing a full in-depth review on the NASDAQ and how I was able to make $1,000 while I was swimming in the Caribbean islands. Okay, it obviously sounds amazing because it was. That's the life of a trader. So let's go ahead and lock in and give you guys all the mechanics of, what actually went into this trade. Okay, so first and foremost and most important, without a doubt, like most important, okay, is number one, this draw on liquidity right here that was generated. Okay, this 9:42 a.m. high. Okay, and I'm going to annotate this as a time-based old high. Okay, because that's exactly what it is. So we have 9:30 opening price all the way back here. All right, and as you scan to the right, you're going to find that first, or just the highest high from 9:30 to 10 a.m. Okay, and this was the high that was left behind right here at 9:42 a.m. So that draw on liquidity in and of itself is very powerful. You couple this opening range time-based high with it being in a stacked trend line just like you see right here. Okay, it becomes very, very powerful with that combination. So we have this high generated here. We have a lower high, lower high, lower high, lower high. And overall in this section of price, very high resistant, right, buildup of buy stops resting above all these highs. And then we dive down. Now, this dive down is super key because it's not just some random drop in price, right? It's actually delivering below that 9:30 opening. Okay, very, very key. So this is your manipulation inducing top pickers, right? So this was me just completely preying on everyone that's trying to pick the top and be the hero. I'm not trying to pick the top and be the hero. I'm just going to go off of what price actually tells me, right? So when we dive down below the opening price here, we're running down and we're sweeping out this low right here. Okay. Now this low is very significant because we had a run up overnight. Very simple, right? We had this large run up overnight in London and we created this swing low left behind in price right before we had this crazy huge rally to the upside. So we have a key old London low swept from the market. We're trading down below that 9:30 opening, inducing shorts with high resistance liquidity stacked above, right? Also, understanding the higher time frame market that we're inside of, okay, it gives me more confidence seeing that we're pretty ridiculously obviously still in a bullish market. I know everyone wants to see this thing collapse, and we probably will get some type of higher time frame retracement, but for now we're still in a bullish market. The day before creates this intermittent term low, we run up overnight, right, further establishing strong bullish order flow until I'm proven wrong. Was I proven wrong? No. All we did was generate these imbalances here on the hourly chart. We have this hourly gap. It delivers that hourly gap, and what does it do? Wicks down into it, huge reaction up off of that, and starts running back to the upside with speed. All right, so this is when I scale down. Now, before I say anything further, I also want you guys to realize one of the most important parts of this video. Okay, I keep saying everything's important, but it really all is important. Okay, this range right here, this is our weekly range that we're inside of. All right, I understand that the entire week was a more range-bound manipulation type of profile. Okay, versus last week where it was just very, very trending, very beautiful, very easy to trade. Okay, what I did in this market was go for larger trades, hold runners, trade more frequently, right? All those great things that traders love to do. In this market, when we're ranging like this and it's high manipulation, I'm not going to force my will. I'm going to preserve the profits that I made from the last week, which was a lot of money. And I'm going to simply just go for base hits, very small base hits, get out, or just do nothing at all. And that's exactly what I did here today. I understood the conditions and I took my base hit to the highest quality, highest probability high that I knew was going to get tagged, and it happens almost every day. And again, that was that time-based high right here. So what did I do? I waited for our key levels to be engaged. I mapped all those out. I start seeing us run to the upside, and we're already beginning to, disregard opposing levels, right? We inversed this 1 minute fair value gap. We completely disregarded this old low right here and ripped right back above that. Okay. We consolidated a little bit, and then we ran back to the upside, piercing through the midpoint of these up candles here. Now, these up candles are significant to me because these are the last up candles that were left behind before we created our manipulation to the downside. Hey, what's up? Okay, sounds good. Love you. All right, so now with that said, I like this expansion in price. Now, it's not the cleanest movement ever, and I know that this none of this action that we got this week, except for what I saw here today, was really enticing for me to pull out live funds and risk a bunch. Okay, but this setup right here is bread and butter. Let me expand right here. Okay, we create this gap in price with the volume imbalance. Okay, so we created this volume imbalance here, create another gap here, and then a volume imbalance right in there, as you can kind of see it right there on your 30-second chart. Okay, and I mean, this is really the least important part of the video. Okay, you're going to be looking at this and trying to overanalyze, but this is all I was utilizing to get my entry in the market and have a solid stop loss placement, right? That's why this little stuff here matters. Okay, so all the other outside context was what really made this trade effective. Okay, and this draw on liquidity. All right, real quick, if we go back to the 1-minute chart, this right here was your very, very specific last down candle performed before we run the time-based liquidity resting above here. Okay, so when we had this expansion, right, this was like the last little piece of confirmation that I possibly needed to scalp this, right? I didn't need anything else at this point. So we run down, create this down candle, we engulf that, or change our state and delivery above that opening price with speed. Once again, boom, that's what I saw. Okay, so when I saw that, this opening price right here was my entry, right? So longing, once we got that change of state delivery on the lower time frame, here's my target right at the time-based high, and my stop loss was going to be resting below here comfortably. I was comfortable with this right here. Why? Because my draw on liquidity was very close in reach. I'm only scalping, and I know that this down candle, once we change our state and delivery, and we're in the upper, half of the range, there's no reason why it should pull back on me. It needs to just run back up to the high. Now, once we go back to the 30-second chart, another careful consideration that I had, this was actually my real stop loss placement. Why? Number one, it's covering the candle that created that gap and volume imbalance. Okay, still weathering below these down candles. So what does this do? This kind of helps me cancel out, right, any potential fake wick out, right? So if like the market wanted to get animated with one more little retrace, right, I knew that I'd still be on the right side on this scalping basis to get my time-based high delivery, right, as long as we held a body inside of this gap with that model 2 down candle. Okay, so this is what I call my model 2 down candle. The last down candles formed and the change of state delivery, right, before we reach a very, very high quality draw on liquidity. So none of this works if you don't know where the market's drawing towards. Does that make sense? So you need to know, number one, high quality targets, which I gave you that in this video. And I guess just overall market experience and screen time to have conviction for this type of stuff. And, that comes through data. That'll conclude today's review, guys. I really, really hope you got some insights out of this. And until next time, guys, God bless you. Be safe. Good luck, good trading, guys.